Here are the crypto top headlines covered in this video. BNY identified as first bank to receive SEC exemption from SAB 121. Next, Ethereum open interest hits 20-month high, bullish or bearish for ETH. Also, Bitcoin outperformed nearly every asset class in past year, says VanEck. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: BNY identified as first bank to receive SEC exemption from SAB 121. On Monday, during a public hearing in Wyoming, BNY was named as the bank that received an exemption from the SEC's onerous rules for custodying digital assets. In what would be a huge breakthrough for banks looking to dive into institutional crypto custody business, BNY, America's largest custodian bank, was identified during public testimony in Wyoming's Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology as having received a variance from the following: the SEC's SAB 121 accounting guidelines for its institutional crypto custody business. As part of a broader federal update on Monday, Chris Land, General Counsel for U.S. Senator Cynthia Lummis, Republican Wyoming, testified that the SEC and thus likely other regulators have cleared the way for BNY to provide institutional custody of digital assets. BNY is looking to get more involved in the crypto custody business, Land testified. They had some problems with Staff Accounting Bulletin, or SAB 121, and the SEC has apparently given them some kind of variance from SAB 121 to move forward. Land provided this update in the context of the potential impact to Wyoming's Special Purpose Depository Insurance, or SPDI, bank charter held by companies such as Custodia and Kraken. SEC reveals SAB 121 exemptions for crypto custody. Last Monday, SEC Chief Accountant Paul Munter gave a speech in which he surprisingly revealed that the agency had granted some exemptions to SAB 121, mostly finding that the rule did not apply to certain entities if they met certain conditions. Munter said in one exemption had been granted to a bank, several brokerage houses, and other entities that use blockchains to track and transfer traditional financial assets without specifying the names of any of them. SAB 121 requires that entities who choose to custody crypto list the assets on their balance sheet and create a corresponding liability equal to the worth of the crypto. Though it is technically guidance, the General Accounting Office determined that it was a rule. The crypto and banking industries have strongly criticized this measure as overly burdensome to comply with. In his speech, Munter outlined situations in which the SEC found SAB 121 did not apply for a bank, brokerage house, or other entities that use blockchains. In the case of the bank, he said, the conditions involved the institution working with a state regulator first to ensure that the crypto assets being custodied would return to the customer in the event of a bankruptcy, and that activity with customers would only comprise institutional custody with sufficient controls in place to manage risk. How other regulators view BNY's potential crypto activity. BNY is located in New York and is supervised by the New York Department of Financial Services, or NYDFS, and at the federal level, its prudential banking regulator is the Federal Reserve. In his testimony, Land described how the Federal Reserve was part and parcel to this SAB 121 exemption, saying, as the Fed regulates Bank of New York Mellon's bank holding company, the Fed would have had to have given their non-objection under the current legal requirements and guidance to Bank of New York Mellon getting into the digital asset custody business. However, it's not clear if the Fed would have had to give a non-objection letter. Two Fed supervisory letters in 2022 and 2023 did not explicitly say an approval is needed first to engage in crypto custody. The two supervisory letters are SR 22-6, which requires that crypto asset activity be legally permissible, and SR 23-7, which indicates crypto custody is within the scope of the Fed's supervisory program for crypto. However, a rule specifically for state banks like BNY indicates that such approval would be necessary. Policy statements 9-13 issued by the Fed does suggest state banks need to follow rules that apply to national banks. The Federal Register says, as an example, that if the Office of the Comptroller of the Currency, or OCC, requires a national bank to receive a non-objection letter before engaging in a particular activity, then a state bank would need to obtain the same type of letter, but from the Federal Reserve. And the OCC does require that banks obtain non-objection letters before they can engage in crypto asset custody. Chair Cyrus Western of Wyoming's Select Committee on Blockchain raised the question to Land as to whether BNY would need to obtain New York's BIT license. Land said BNY would likely argue banking laws provide federal preemption, meaning the BIT license would not apply. BNY declined to comment on the matter. A spokesperson for the SEC declined to comment on any individual entity, but did point to the speech by Munter on SAB 121. The Federal Reserve declined to comment, and New York's DFS did not respond to multiple requests for comment on the matter. Michael Novogratz, CEO of Galaxy Digital, speculated last week on Fox Business that the bank the SEC had exempted from SAB 121's requirement was likely BNY, and that the exemptions should allow more traditional banks to start participating in crypto. On September 8th, BNY CEO and President Robin Vince appeared on a Yahoo Finance podcast titled How a Bank Founded by Alexander Hamilton is Prepping for Crypto, in which he provided some of his perspectives on the burgeoning digital asset industry. An unfair playing field? Following Land's testimony on Monday, Western of the Wyoming Select Committee told Unchained that the SAB 121 exemption, apparently provided by the SEC to BNY, shows that those double standards are getting worse and not better, which, from a state perspective, is incredibly frustrating, and we're really disappointed by it. Folks like Custodia, Kraken, Bankwise, who have played by the rules this entire time, who want to be good corporate citizens, who want to pay taxes, who want to create jobs, they're just kind of getting stuffed in the corner, being ignored while clearly there is a game favorite, BNY, said Western, referring to instances such as how Custodia was not granted a master account at the Fed, a key competitive disadvantage which Custodia has sued the Fed over. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Ethereum open interest hits 20-month high, bullish or bearish for ETH. Ether's futures open interest jumps to a 20-month high, but leverage demand remains balanced. Ether surged 11.7% between September 17th and September 19th, hitting a 3-week high of $2,572. This price movement coincided with an uptick in Ether futures open interest, reflecting the total number of contracts on derivatives exchanges. As a result, traders are becoming wary that heightened leverage could amplify potential price fluctuations. Lower interest rates favor ETH's bullish momentum, but the U.S. economy remains a risk. The recent ETH price rally mirrored the broader cryptocurrency market's 8.3% gain, fueled by a combination of an interest rate cut in the United States and robust labor market data. This momentum also propelled the S&P 500 index to close at an all-time high on September 19th. Lower interest rates reduced the cost for companies to issue new debt, easing concerns over a potential stock market correction. However, economists remain divided on whether the U.S. Federal Reserve is effectively balancing economic growth and recession risk, according to a report by Yahoo Finance. This ongoing uncertainty has left cryptocurrency investors cautious, questioning whether it's too early to assess the success of the Fed's monetary strategy. On September 20th, FedEx shares plunged 15% following disappointing corporate earnings released a day earlier. CEO Raj Subramanian attributed the earnings shortfall to a weaker industrial economy and inflationary pressures, which have led customers to shift away from priority shipping services typically associated with higher fees. Subramanian also cited a challenging operating environment impacting operational margins, as noted by Yahoo Finance. Despite these broader macroeconomic concerns, Ether futures open interest spiked to 4.66 million ETH on September 19th, the highest level seen since January 2023, signaling strong demand for leveraged positions. While the recent price gains clearly explain the rising interest in Ether leverage through futures contracts, they don't necessarily indicate increased bullish sentiment among traders. In derivatives markets, every buyer, long, is matched by a seller, short, yet the level of demand for leverage fluctuates. This variance can be observed in the pricing of monthly ETH futures contracts. ETH futures premium is stable amid increasing open interest. One might expect bullish sentiment to be the driving force behind the increased demand for Ether futures, but the data does not offer a conclusive view on this. The ETH futures premium has remained relatively stable at around 6% per year since August, slightly above the neutral 5% threshold. Traders generally require a premium to compensate for the longer settlement period in monthly contracts. During periods of heightened excitement, this indicator can easily surpass 10%, as was the case in late July. This stability in the futures premium suggests there is little incentive for traders to engage in the cash and carry strategy, which involves selling futures contracts while simultaneously buying spot ETH to capture the premium as a fixed income trade. Therefore, we can infer there is a certain degree of genuine demand for bearish positions on Ether, as the futures premium has stabilized despite the recent price gains. The current market conditions stand in stark contrast to late May, when ETH rallied 28%, pushing futures open interest to 4.44 million ETH, just 5% below the current level. However, on May 31st, the Ether futures premium surged to 14%, typically indicating excessive leverage demand from bullish traders. This time, the risk of cascading liquidations appears much lower, thanks to a more balanced distribution of leverage between long and short positions. Currently, Binance and Bybit lead the Ether futures market with a combined open interest of $11.9 billion, controlling 30% and 17% of the market share respectively. This concentration hints at significant retail demand, especially since OKX, Deribit, and the Chicago Mercantile Exchange collectively account for 24% of ETH futures open interest. Despite the rise in open interest, the lack of excessive leveraged usage mitigates fears of heightened volatility in the near term. Our next top headline: Bitcoin outperformed nearly every asset class in past year, says VanEck. VanEck expects Bitcoin's long-term bull market to continue, but miners are struggling. Bitcoin has outperformed almost every asset class in the past 12 months, but a recent drawdown has investors spooked, according to a September 19th report by asset manager VanEck. Spot BTC prices are up some 124% since September 2023, and BTC has gained relative share among cryptocurrencies, according to the report. Bitcoin's market capitalization, which is approximately $1.25 trillion as of September 20th, comprises 56% of crypto's total, up some 15% since a year ago, VanEck said. VanEck expects Bitcoin's long-term bull market to continue for the foreseeable future, adding that Bitcoin's adoption as an investment vehicle isn't driven by the same forces today as in 2023. Previously, BTC adoption was largely a retail-driven phenomenon, accelerated in 2023 by inscriptions, which VanEck describes as a viral innovation enabling users to store media files directly on the Bitcoin blockchain. Inscriptions' waning popularity in 2024 contributed to an approximately 52% year-over-year decline in transaction fees on the Bitcoin network, the report said. Bitcoin's price appreciation this year is better explained by growing adoption as money, a vehicle for storing and transferring value, VanEck said. In January, United States regulators authorized the listing of spot BTC exchange-traded funds, which now command approximately $55 billion in net assets, according to data from fund researcher Morningstar. Since then, wealth advisors have adopted BTC ETFs faster than any new ETF in history, Matt Hogan, asset manager, Bitwise's chief investment officer, said in a September 9th post on the X platform. Bitcoin's long-term growth is driven by powerful, enduring mega themes, the rising need for decentralized, censorship-resistance networks, growing institutional adoption, and increasing sovereign involvement in mining and cross-border trade, according to the report, which was authored by Matthew Siegel, VanEck's head of digital assets research. The biggest losers in the past 12 months were Bitcoin miners, who have had a terrible year in 2024, the report said. Bitcoin networks' April halving is largely to blame. Every 4 years, the number of BTC mined per block is reduced by half. The April event reduced mining rewards from 6.25 BTC to 3.125 BTC per block. That has weighed on BTC miners' fundamentals. The Bitcoin hash price, a unit of profitability in the industry that measures the revenue earned for each 1 trillion cryptographic hash calculations per second, is down 97% year over year, VanEck said. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.